Any company has to be prudent financially, right? They have to spend for growth, they have to invest for the future, but at the same time cut down the wasteful expenditure. It doesn't change irrespective of what stage of evolution the company is in. Infosys, was generating almost about $1.5 billion in cash surplus every year, with a 26% operating margin. It still could not spend the money the way we would have liked to, because there's always going to be investor pressures in terms of performance quarter after quarter. The advantage of being in a startup is that you are looking at investments are much more easier to make. You are looking at a much larger story. You're trying to you're looking at accelerating your growth, capturing a certain market share, right? And that is, when you have private equity guys backing you up, who believes in your vision, who understand your strategy and back you up there, I think your ability to invest money for the future is far more easier. Right? But at the same time, we have to be prudent in the way we spend money.
So when you say prudent, any specific measures that you're taking? Have you set, targets with respect to break even? What are we really talking about?
No, prudent financial management doesn't mean that you're setting up targets only for break even. Prudent financial management would mean that you're looking at where you're spending money. What is the ROI? Do you bring the culture of ROI in every rupee that you spend here? Are you investing for the growth, and what would that mean over the next couple of months, a couple of quarters, a couple of years as we speak along? Are you looking at the operating cost? How do you turn more and more of your cost from fixed to variable? How do you look at the scale benefit coming in, and how do you improve your productivity over a period of time? So financial prudence management would mean that you do a proper capital allocation, you do a proper portfolio management. Any startup, and Ola in particular, has tons of ideas, because it's a very passionate company, young company with tons of ideas, and now can you put money in every idea? Right, so you have to run a very proper, a good process in terms of how you're going to do portfolio management, how you're going to allocate your capital. Because at the end of the day, capital has to be preserved. We have to invest for the right things, and you should not get carried away with every opportunity that comes your way. I think that is what is important. But again, because the business is so dynamic and it's changing on a daily basis, you really cannot put so many processes and systems and procedures, look at a 5-year model and a 3-year model, and make a company very bureaucratic. It has to be very nimble. It has to be very agile. Right? A startup has to be very agile. It should be able to respond to a market situation almost in an hour's time. Now, so it is going to be a balance between the two: financial prudence, bringing in good portfolio management, capital allocation, at the same time maintaining our agility and being nimble.
Right.
I think that is the biggest challenge.
In your last fundraise, I think you valued it over $5 billion. So in the next time you go to market, again, will it be from your investors, or will you even look at tapping public markets? Are you prepared for that? What is the roadmap?
No, again, the way I would look at it is that we have a vision to provide mobility to 1 billion people in India. And we are all working together to put strategies in place, looking at the execution plan to be able to realize that dream. As we go along in that path, we would need to raise capital. Whether it's going to be through private equity or whether through public, it is something that we'll have to look at, evolve, and decide and evaluate as we go along. I would not want to say that we want to raise money through private equity or IPO at this stage. But having said that, I think...
But you're open to both?
The idea is that you have to be open to both, right? You have to raise capital as you go along, because you have a great vision ahead of you. You have to invest for growth. You have to expand, and you would need money. But having said that, being an IPO-ready is not an easy task. It means that you need to have a scalable and sustainable business model. You need to have a good execution strategy. You need to be able to have a path to profitability. You should be able to generate enough cash surplus. You should be able to stand the scrutiny of investors on a quarter-to-quarter basis. You should be able to have a great corporate governance. So there's a lot of things that you need to build as you go along to be able to be IPO-ready and to go for an IPO. Having come from Infosys, I would want this company to be IPO ready as early as possible, because these are things which are good for an organization to build as early as possible in its journey. But does it mean that we will go for an IPO immediately? No. That is a different decision altogether. So being ready for something...
What kind of timeline are we looking at? Either, your next fundraise or IPO, what kind of... how long can you go with the current cash that you have, the cash that you're generating to keep operations going? By when will you need to tap investors again?
I think they're very well capitalized. We have a lot. We raised about $500 million in the last round, so we are very well capitalized. We have a lot of cash. So I don't think the you are going to raise capital only when you need it. You're looking at your 5-year journey. You're looking at what you're going to invest for, what the market opportunity is, how much cash you need to generate, when, where, how. And so again, it's a continuous process. I would not want to put a timeline as to we're going to raise cash, so much of cash in so much of time frame. No, that's not the way we are going to run our business. It all depends on the vision, the strategy, the opportunities which come in the marketplace, how much cash you need, where you want to invest money on, and where you want to raise it from. So these are things which are going to change on a daily basis and evolve over a period of time. But does it mean that we don't have a plan? Yes, we have a plan. Do we want to be IPO ready as quickly as possible? Yes, we want to be ready. Does it mean we're going to go for an IPO immediately? No. Right? So these are different decisions. As an organization, we would want the best processes, best systems, best execution engine, best strategy, best of everything. Right? And that means that is what IPO ready means. Right?
Rajiv, a few months back at least, the sense was that you could identify multiple use cases using your existing platforms, the cabs, the two-wheelers and everything that you apply. But considering the grocery cafe experiment hasn't worked, I think you're no longer doing that, you've shut that. I mean, is it fair to say that everything that Uber does in the US will not work in India? Delivery in the US, it may not work for Ola. Has that given you a reality check into the kind of businesses that you play?
No, two different questions. One is, have we shut down our store and cafe business? No. Has the experiment failed? No. See, these are experiments which have been done. We have a large customer base. We have a large, driver base. Now, and we have a great number of vehicles on our platform. Can we leverage them and create a synergy benefit for other businesses? Right? Now, one of the biggest challenges in a store and a cafe business is logistics, is transportation, is delivery. Now, could we leverage our transportation business to be able to do that? Yes. So you will always look at how you can synergize your different businesses. You have a great asset created. Can you use that asset for something else? So these are experiments which will continue. It will keep evolving as we speak. Having said that, it is not about what Uber does and are we reacting to that. No, Uber is operating in a very different market. US is a very different market. There, if you look at the car density, is almost 63%. India is only about 67%, right? They're very different markets. Here, US has a great infrastructure. India doesn't have infrastructure, right? Even if people want to buy cars here, can they really buy cars? Even if government wants to build infrastructure, can they really build infrastructure because it requires a massive capital investment? So it's a very different story in India. And the advantage that we have is we understand this market very well. We are local players here. We operate in 100 different cities. We know exactly how the Indian mindset is. What the transportation needs of people are, how the families are run, what kind of transportation requirements are there for housewives vis-a-vis the working ladies, vis-a-vis the people, vis-a-vis the elders in the families. So people have different needs, right? And we are the local players. We're able to customize and localize our products in a much quicker and faster manner to be able to cater to those requirements. So the idea is not about trying to do what competition does. It's to be ahead of the curve, is to be able to innovate ahead of anybody else. And I think if you look at our market share in India, we are clearly ahead of the curve. We are innovating much faster than anybody else here.
Right.
And that is the way I would see the way forward too.
And a couple of questions really. You recently inked a global alliance with TV Quebi of China. Just want to know in what ways is that working out, or on a practical basis, where do you guys really collaborate considering you work in different markets?
No, see, the very fact that we are operating in different markets means that we can collaborate. We are not a competition to each other, right?
So is this merely technology transfer? What kind?
No, it is about sharing best practices in terms of your strategy, your execution engine, your technology platform, your consumer behavior.
Explore an overseas foray, say, in other
no, but again, India is such a huge opportunity that you would first want to focus on India, right? Be able to touch the lives of 1 billion people here. Only after once you realize that, would you look at things beyond that. But that is itself is a long journey ahead. GD has done great work in China, right? They are the dominant player in China. The way they have expanded the market, the way they have touched the lives of people in China is something that everybody, believes they've done a great job. So you would want to look at how they have achieved that. What kind of technology innovations have they done? What kind of products they have reached out to, and what kind of pricing strategies they've used. So I think there's a lot to learn from any of these players, whether it's Lyft or whether it's Grab Taxi or whether it's Didi. And being part of the Global Alliance gives us access to them to be able to leverage on their learnings. We don't have to reinvent the wheel again. We can learn from the learnings and then customize it, localize it for our requirements.
Right.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.